Hello and welcome. Good morning. You're watching India Market Open. It's Thursday. The Fed minutes are behind us, but I think the bigger story this morning is going to be Zomato. I think Zomato has taken over the Fed chief this morning.
That's such a powerful line.
But I'm convinced it's true. See, Asian markets are quiet. No one's really reacting to the FOMC minutes. Guaranteed Zomato investors will be reacting to Zomato.
Yeah. It was expected.
Paytm. Yeah.
No, so it was expected.
You're talking about the Fed.
Yeah, I'm talking about
and
actually
so was
both.
Zomato actually.
Actually both. Fed was expected because we know that the stance was dovish, so the Fed minutes have just bolstered that. Zomato and the Paytm deal was already announced. We just have the details of it now. Yeah. But all in all, I think the views coming in are fairly positive.
Yeah, I mean, for Paytm, it's certainly short enough. I mean, we'll talk about that in detail. But I just like this fact that we are ending this week with dovish Fed minutes, Jackson Hole Symposium coming up, and very likely Jerome Powell will sound the bugle of dovishness as well. So. Not bad.
It's a good looking setup, an implied Nifty. If you can quickly take a check of that, if it matters, Bank of Korea has held its rates, and that's giving Asian markets a little bit of bump up in early minutes of trade, and we are following on from there. Even what happened yesterday, Tamanna, I know you've been missing, but we had the full day which was quiet, and then the last hour of trade saw a spurt of buying coming in. Yeah. And this is what we've been reiterating, right? If 24,700 is held, we are headed one way, which is upward. So now we'll leave it to you on what FIs have been doing and whether we have any major cues this morning.
So the FIs are not the ones really coming in and buying. They're sitting this one out, and maybe the global cues will give you a better sense of why. A lot of wait and watch across the world, right, for a various number of reasons. But in terms of US markets, definitely a resumption of that relief rally that we have been seeing. So the rebound rally has continued, and the Fed minutes, that is the minutes of the last Fed meeting in July, has definitely helped because of the commentary that has come in. Let's just give you a look at how US markets closed. The Nasdaq up about over 0.5%. S&P 500 also up in the green. So 9 out of the last 10 sessions have been positive for most of the key indices. Your Dow futures are flat as we speak. The big takeaway of what the Fed minutes really said, and I think the number one line I would say is a vast majority of all of these members of the Fed committee saw September cut as likely appropriate. Now, this is something which the market is already sort of been pricing in. Several officials saw a case for cutting at the July meeting itself, and I found this important, that, while September is being talked about, there were enough in the room who thought July itself was a good case for a rate cut. The downside risk to employment was seen as increased, and this is why jobs data becomes more and more important week on week, and of course the monthly jobs data which will come in the US markets. Almost all Fed officials expected continued disinflation. So this would be, the 3 or 4 key points. Of course, like Niraj was also talking about, the Jackson Hole Symposium, which begins on Friday, and Jerome Powell's meeting becomes very important. The Jackson Hole Symposium is something that the Federal Reserve organizes. It's a meeting of all, central bank chiefs. It also has all the top economic voices there, and it's somewhere where the Fed chief, the Fed chair, comes and talks about how he views the economy, the direction, etc. So another place where you can glean what is on Jerome Powell's mind. The other big factor to look at is, like I said, jobs becomes important. So the weekly jobless data, which is due on Thursday, will be the next big trigger. It also becomes key because there was a revision and a downward revision of the number of jobs created that was put out. So between April 2023 and March 2024, the data that they had earlier put out for the number of jobs created has been revised downwards to 818,000. So about nearly 8 lakh jobs have gone off and were incorrectly perhaps put in that bucket of the number of jobs created. That would again bring that question mark into whether there is a problem with the economy and on the jobs front in the US. So the Fed might be going from sorting out an inflation problem to now tackling a jobs problem. Bond yields also in line to all of this data coming in at 3.8% on the 10-year. Oil prices also trending downwards as a result. Brent at $76, and of course Chinese data has not been great as well. So that dual concern remains. Asian markets, meanwhile, have been pretty strong, and let's just quickly look at how Asia has picked up. Bank of Korea in view. Nikkei has been leading the pack this morning as well.
Yeah. So just before I go to Jonathan, just 20 seconds actually. What caught my eye in the last 24 hours amongst everything else that has happened? Yeah, guys, remember Carvana? So Carvana is this the stock of the company which used car dealer, right? Hit a low of 4 2 years ago. Is now trading at nearly $80 or thereabouts. Wow. It's a 30x jump in less than 2 years.
Unfortunately, we can't go out and make a lot of... No, but Nasdaq ETFs now have stopped taking money. So while you may want to play that rally, the government may not let you do so just yet.
It's okay. We'll tell you about a lot of options that you can invest in here in India. But Jonathan Barrett, Chief Investment Officer at ETO Markets, joins us this morning. Jonathan, very good morning to you. And let's begin with your take on what's come out of the Fed minutes and the dovish stance, which is very clearly there, especially the fact that a lot of members thought July was already a good point for rate cuts.
Yes, good morning. I think it's something that we all wanted to see. We wanted to see the Fed be reactive. We've had a series of economic data which hasn't been that positive in the States. Last week's industrial production, manufacturing, all showing signs that the economy was weakening, and also some of those jobs. But when I look at the announcement, it sort of says to me, well, that's something we really want to do. That's what we're seeing, a rally at the moment around that. And I think when the Fed there, I think the market's saying, well, look, are we looking at a quarter or are we having a half? But I actually feel that we'll probably get a quarter. I think it is September. And I think the likelihood going forward is the market will continue to be relatively strong.
Jonathan, historically, we've seen that markets play the buy the rumors, sell the news. Yeah. The markets have already priced in a 25 basis point rate cut. Some even believe a 50 basis point rate cut could take place as early as September. Do you feel like come September 18th, traders and investors might take profits off the table because the event would be behind us by then?
Look, I think that's highly possible. I think the key there, once again, is seeing, one, that we get the rate cut, and two, what are all the leading and lagging indicators telling us? The leading indicators will be how employment reacts, and that's what we want to see. But you'll always get that adjustment. Buy the rumours, sell the fact. A quarter of percent will the market be happy or upset with that. I think you might find some adjustment to asset prices as a result, but the key will be in how the numbers respond to that rate reduction. And to me, I think you might see some, because we are on record highs, and there is that need for the market to consolidate. So I don't want to get ahead of it and say the market's going to go a lot higher. It's just going to sort of have that market where it consolidates, creates that base for it then to really start to move on if those numbers, those economic numbers, start to follow suit and they start to improve, i.e. employment starts to pick up, industrial, manufacturing numbers all start to rebound from those lows we saw just over the last quarter.
A word on, just over an extended period, and good evening to you, of course, thanks for joining in, but crude prices, we're speaking to a couple of brokerage houses, Citi, etc. And the house view seems to be that it's very difficult for crude to be northwards of $80 a barrel, even with geopolitics around, but once the geopolitic noise settles down, hopefully soon, that we might not see that. From an Indian perspective, that's great news, but I'd just love to understand, how do you think about that aspect with Fed minutes, with everything that's happening? Can commodities surge or will crude stay under check?
I think that's very important, because when we went into this inflationary drive, it was the energy inflation which was the key to it. And the unknowns that we had in terms of what was happening, in the Ukraine and also recently in the Middle East, that does remain an issue. Because I think oil will be a driver as to how we see this disinflation that we've been experiencing actually occur. How does that disinflation continue? And it has to continue when we get our energy and our energy consumption sort of remain going up, but prices have to continue to go lower or stabilise. Oil, when it trades, has a great ability to stay in a range for quite some time, and that creates stability for our pricing. So I would actually like to think that we are going to get some results out of the Middle East. We'll get some results out of what's happening in the Ukraine, and that will help energy prices remain stable and remain lower. For whilst we have those occurrences not put to bed yet, that it creates a concern that could always be something that will push oil prices higher. And as a result of that, energy inflation starts to pick up at the moment. It is contained, and I'm quite happy about that.
Another asset class that's having a party of its own is gold. It's up 20% in 2024. From where we look at it, while crude may be underestimating geopolitical stress, gold seems to overestimate everything that's happening geopolitically. And while it's risk on for equities, it's risk off for gold. What is the outlook on gold prices? I've heard people say $2,700 as early as the rate cut. Is that likely? Would you be constructive on gold at current prices?
Look, I think that to me is quite interesting. And I think, obviously India is such a large consumer of gold, and I think that's really positive. And I think there are other reasons why people are buying gold. And a lot of that still has to do with the central banks diversifying their asset class. We look at sort of the PBOC and their buying spree that we've had for the last year. They did drop out of the market and the prices went down, but it appears that they're back in the market supporting prices. You do get a sense that when you do get this disinflation, and of course we've got a lot of disinflation still in China, that the price of bullion should actually come lower, but it's defying this, which I think is quite interesting. Also, when you look at the US dollar, that's come back a little bit, but not so much that would warrant these prices. But there is this thirst, and I think that thirst for gold is there at the moment. I do think it will continue, but I would like to see some consolidation. I'm not as bullish as you are on where gold should be going. But when I do look at the bullion markets, I think that I look at silver perhaps as a better bet over gold, because gold's at record highs, silver is not, and perhaps that's something, if I wanted to get onto this trade, I'd probably look at looking at the silver market as opposed to the gold market.
Thank you so much, Jonathan Barrett there, Chief Investment Officer of ETO Markets, on all things Fed. We'll wait and see what Mr. Powell says at the Jackson Symposium. Great speaking with you, Jonathan. Meanwhile, just quickly, let's pull up what the fund flows have been like in the markets yesterday. We talked about, a recovery towards the close. It wasn't FIIs buying. Clearly, 800 crores of sales continue. So the FIIs have continued to be sort of not too constructive on Indian markets in the last few sessions. DIIs buying about 3,000 odd crores. If we talk about the big stocks to watch, no prizes for guessing what's first on Samina's list?
It would be on all our list this morning. Zomato is what we're talking about. Of course, we'll just highlight the news flow and then we'll talk about it in a lot more detail with experts, because I think the big value will come from there. Zomato has announced late last evening that they would acquire the entertainment and ticketing business of Paytm for 2,048 crores. As the food delivery giant, remember, Zomato looks to expand its presence in the going out segment. While the embattled fintech really seeks to relieve, this is a huge positive for Paytm. Whether or not this is going to be a deal upfront positive for Zomato is what we'd like to understand. What I should reiterate is that every single brokerage covering the stock, while I've talked about the risk, they've all retained their price target. And I believe there's one that's actually come out and upgraded its target price on Zomato. Well, questions could be asked whether the capital allocation is what is in the right direction. Some may argue this could potentially be an expensive deal, but the big brokerages still maintain a buy call on Zomato, even post their announcement of acquiring this part of Paytm's business. We will dwell on it in a minute when Sajid and Mahima and, of course, Pankaj Muraka join us. So that's the stock of the day. The stock of the day is Zomato, and it's going to be Paytm. Let's not forget, this was in the offering since its last earnings reporting, and the stock has been on a one-way journey. So while the market could have perceived this information coming sooner than later, it's already had appreciated the fact that maybe they were thinking about it, because I don't know about the two of you, but it was surprising the way Zomato has moved post-reporting. It's been a one-way direction. Even when you had Antfin exit 2 days ago, the stock recovered quite well. So there's enough and more people willing to buy the counter. So no surprises. The deal has been signed now.
Yeah.
But I think the markets knew and the markets had liked it.
Yeah, and I think in terms of valuation, and I'm sure that conversation will happen in a bit about expensive, not expensive. I think it's going to be moot because look at what they've done with Blinkit. They got it in FY 2023. The way they've scaled that business up, it's a two-horse race for the going out business right now. In India, you have Book My Show and Paytm Insider. Paytm has been languishing for all purposes, and Zomato has now a track record of turning around businesses. So suffice to say, this is going to be one of the stocks of the morning. Great deal for Paytm as well. But a few others to quickly go through. Let's talk about RVNL. RVNL is another one which you should keep on your radar. It's going to be marking its presence in the ASEAN market. They've signed an MOU with this company called Dhaya Maju Infrastructure. They're going to be establishing a manufacturing base in Malaysia for railway coaches. I know this is, a bucket of stocks which have not seen a lot of investor love. But in terms of news flow, this is definitely positive for them. BEML is the other one that I wanted to quickly go through. They've partnered with the Indian Navy to develop advanced marine applications for defense. This is a pretty big one, actually. They've not given details of how much this specific order size is, but their closing order book as on first quarter was 11,800 crores. Their guidance is a 20% revenue growth. And major tenders are also additionally expected in rail and metro segment. So even as the whole conversation continues about whether all of the upside is priced in for this category of stocks, but the fact is that the business is coming in steady and there's no change in that policy direction. IREDA is the other one. They're raising about 4,500 crores through multiple instruments. Their board meeting will be on August 29th. So you might see some impact there in IREDA as well. So these are a few of the other stocks. Any more on your list before we get to
Zen
Zomato?
Technologies, only because this has been on a tear in the last couple of months now, and year to date the performance has been phenomenal. But very quickly on Zen, the news this morning is that they've announced late last evening that they're launching a QIP. For about 800 odd crores. It comes in at a 5% discount to yesterday's close, at closer to that 1,685 rupees a share. They also have an upshot oversubscription option, which could take this offer size to 1,000 crores. This, from my opinion, is going to be one to track, but only because Zentech is, operating in a space that's not only a sector that is big for India in the defense map, but also because it's a big niche where it talks about training their armies and has a massive order book internationally as well. So we'd love to, of course, talk to Mr. Atuli at some stage to understand what they plan to do with that money that they're looking to raise. Another one is
the price movement yesterday tells me that this QIP is going to be
oversubscribed.
Yeah.
Just like everything else we've seen over the last few days. PNB Housing Finance, I mean, big, of course, offloading happened over there. The stock surges. So clearly there is demand, and the demand exists, and Zentech, of course, will manage to pick up enough and more funds over the next few hours when the markets open up trade. The other one is talking about stake sales, because that's really been the mood of the markets. Remember, year to date, 1 lakh crore of promoter money has been sold through various, of course, offloadings. This is excluding OFS and excluding IPOs. Kalyan Jewellers is Heidel is looking to sell 2.3% stake, and this time around the promoters actually buying this stake out for about 1,300 crore.
Yeah, I thought that was a pleasant change.
Surprise, huh?
Apart from promoters offloading
you sadly had that for Fortis as well, where we'll talk about that in a minute, where they were forced to do it.
More sure. Yeah, because it's just so much packed on this show. Just very quickly, the 3 stocks on my list, and I'll do a rat-a-tat here. One of them is Schneider Electric. Media reports suggest that Temasek is set to mull exit from Schneider Electric India venture. Now, does this put a bit of a lid on the stock on the upside? I think that's something you got to watch out for. 1.8% higher, but may correct a little bit. And I think the one key brokerage note today is UBS on Shyam Metallics. There is also CLSA and Vedanta. They are very constructive there. But UBS on Shyam Metallics. Initiated a buy, a target price of 1,200, which is a 60% upside on a metal stock. You don't see this too often. They're seeing lower cyclical risk because of diversified metal products, moving up the value chain, strong earnings, acceleration, visibility, a lot of reasons essentially. But watch out for this one. Could see a bit of a reaction. But The big news of the morning, Zomato-Paytm, and well, a full house out here on the NDTV Profit Studios. Sajid and Harsh join in. As usual, Sajid and I will have differing opinions. I don't know what you guys think about every opinion that Sajid gives, but I'll let Sajid and Harsh take over it first. Sajid, over to you.
Okay, so I'm looking from a shareholder's point of view here and how a business is being acquired. If you look at what Zomato is doing, is going to acquire the business of Paytm for 2,048 crores. Let's put it in numbers, and I'm not going by GOVs. GOVs used to be some 10 years ago when Flipkart was the fashion.
GOV is gross order value.
Yes, it used to be something like, big thing in 10 years ago. Now it's based on cash and revenues which you earn. Now you're paying 7 times the revenue and nearly 70 times EBITDA for that business. And at the end of that, what are you going to get? You're going to get 10 million transacting customers, which basically means you're paying 2,000 rupees per customer to acquire them, and you don't know how many of them are unique and how many will transition to your platform as and when it happens 12 months down the line.
And it continues a separate entity, no? They've said
only
this.
for the first 12 months.
First 12 months. After 12 months,
Sajid,
it has to
what
come.
are we comparing this to? How do we know 2,000 is expensive per customer?
So you look at the industry leader here. You have Book My Show, which has been there for more than 15 years now. It's not able to scale up beyond 800 crores in revenues in FY24. So, and Book My Show is a leading, going out app and platform where you get ticketing, you get movies and everything which is there, and it's also getting into other food areas as well as we speak. But point is that 800 crores is the industry leader's revenue, and it has an EBITDA margin of 13%. Your Paytm business has an EBITDA margin of 10%. So there is not much scope which is there for you to expand your EBITDA margin there. So you're basically paying a very high amount to acquire customers, because that's what you're doing. You're not. It's not a business. You're in the business of acquiring customers here, because 10 million transacting customers are there. Okay. And if you had done it organically, you would have spent 300 to 500 rupees per customer for acquisition. And
Sajid, the point out there, and let Harsh take it, but the point out there is that if you do it organically, you are the third person in the race, and you are opening up the Paytm business to be sold to somebody else getting into that business as well.
Before Harsh comes on the Paytm, because Harsh is talking about the Paytm side of the story, I just have a counter to Sajid's point on Zomato. Your concern is, have they overpaid for a business that they could have grown organically? I just want to bring it back to what their track record is with Blinkit, and I have a feeling that, let me just finish. I have a feeling that that's what the market is going to look at. Blinkit came in, or Zomato entered that business after Swiggy Instamart. They turned Blinkit around and they grew it and they scaled up massively. So they've shown a track record of the ability to do it. This is a space where there are only 2 players largely. Book My Show has a majority share. The upside for this entity in district form in another 12 months is massive, and Zomato has shown the track record and the ability to do it. So in that picture, this 2,000 rupees per customer, you're looking at it as a customer who you're not only going to sell movie tickets to, you're selling everything to. So I think
I think District is a separate app. First of all, it's not a super app which is there.
Correct. It's
and
not a super
Zomato
app
does
like
not follow.
Blinkit. Like Blinkit,
like Swiggy, which has food delivery and Instamart in one.
So I think
that.
Investors today are going to look at, and that's what Brokerage is also seeing, is also going to look at the track record of the company and their ability to scale
I
up.
get the part of the track record of turning around Blinkit, but Blinkit is still loss making and it just made EBITDA profit in Q1. Okay, so and it will take at least a year or two before it happens.
Paytm Insider anyway. I mean, no one is making money in this business.
The question is that Paytm Insider is a platform and not where you have the same delivery guy doing Blinkit as well as food delivery, which is there, right? So you have the synergies there, and that's how you're making the EBITDA profitability. In this case, it's a platform business which is there.
From the Paytm's point of view, I think there is
just to add one more thing before I go to that.
We have Pankaj Murarka joining in a moment, so we have a minute and a half left.
So the point is that Zomato claims that it has bought the entire business at 1 times GOV, which is gross order value. But if you go by that as a fair valuation, then Zomato is priced at 4.6 times GOV, which is a high valuation in that sense, right? So what should correct in that? If you
They're
go
different businesses. They're different. I mean, it's not even apples to apples.
The parameter of valuation have been put on by the Zomato management. We haven't put GOV. we are valuing it on revenue.
Going out business and ordering in business are two different businesses. I don't know if you can compare them in that sense. Not even apples to apples.
You're contradicting yourself, Tamanna, by saying that.
No, ability to manage and what you're selling is two different things. Okay, anyway, Harsh.
Just one more point to add on the Zomato piece. We had Book My Show. KKR investing in Book My Show at 7.7 times revenue. This is probably just in FY23. So just in terms of valuation, 7 times versus 7.7. Market leader, Book My Show. 7.7 times, and KKR invested.
So what is the point
transaction.
It was very.
I'm just putting it out there that
it's comparable.
What's
a comparable valuation?
So
you're saying this is expensive?
No, he's just laying out the valuations that it's comparable.
I'm just laying out valuations.
And also, I think
believe it's expensive, but I mean that's a personal
while
viewpoint.
this is a very bold move, there is no secret that the high growth phase of food delivery has run its course. And hence the likes of Zomato and Swiggy are putting millions and millions in the quick commerce space. I guess it is just the next leg of growth. But we can of course debate this, but it's great news for Paytm. I think we're all on the same page when it comes to Paytm.
So I have an easier argument there.
Yeah, you don't have much of an argument, luckily for you.
So it's an easier one. So definitely this is clearly a positive for Paytm. I'm not sure how much of it is priced in because Paytm's up 50% over the last 6 months. So clearly a lot of positivity is already priced in, but of course on a market cap of 36,000 crore now versus the 24,000 crore market cap just about 6 months back. This of course is a significant positive because it's around 8% of revenue, which is solid. In terms of what Paytm has invested in these businesses, that may be relevant because they've invested around 130 crore in net asset value in Obgen Tech, which is one of the subsidiaries which they're going to be selling. Wasteland Entertainment net asset value is roughly 50 crore, so around 180 crore of their own money invested. The other piece is with regard to the couple of other businesses they had acquired in 2017 and 18, Insider and Ticket New. They had acquired both of these for 268 crore. So a cumulative investment roughly of, if I can keep it at 500 crore as a ballpark, and therefore roughly 4 times is what they've made on their investment. So clearly value unlocking playing out. What I am slightly puzzled about is with regard to what they're going to do with the cash, because they have net current assets of roughly 7,000 odd crore.
Right.
Cash plus other assets, receivables, etc.
Harsh, I don't know whether you noticed and read the report this morning where the board of directors of Paytm have also capped their salaries. So executive and non-executive directors from 1.65 crores have now said that we will only take 48 lakh rupees home a year. So clearly, I think they're trying to fix the house.
No, they're fixing the house, but they're also trying to figure out what the business model is going to be.
That's true.
But now they have the cash to do it. We have Pankaj Murarka on, so let's just get his view in. We've been all talking about how we see this deal. Pankaj, very good morning to you and great to have you this morning on NDTV Profit on, I think, the big story of the day for the markets, undoubtedly. How do you view it? And let's start with the first question we've been talking about. Did Zomato overpay, or is this looking like a good deal?
Good morning to all of you all and your viewers. See, I think it's a very strategic move, deal, and I think it's a win-win for both. Don't look at the deal from a valuation perspective. I think that will be too short-term an approach. I think it's a eminent strategic sense for both the companies on both sides. For Paytm as a company which is trying to bring sharper focus on its core business, because they're, let's say, in the payments business, they've lost some market share, they've had regulatory issues. It clearly means that they're letting off one of the businesses which they had seeded and bring much more sharper focus on their core business, which is payments and financial services, including loan distribution, Paytm Money, which is about the securities market business, and insurance distribution. So that's great from their point of view. From Zomato's point of view, they already have now 2 engines which are firing. The food delivery business, which is on a very strong growth curve, and I think that business will continue to sustain growth momentum for the next decade, though the rate of growth might moderate, but still it will continue to be a high growth business for the next decade. You have Blinkit now, which is growing at a phenomenal rate, and probably in 3 years' time, Blinkit could effectively be the largest retailer in India, overtaking physical retailers who've been around for 20-30 years. And clearly now the idea with this acquisition is they're going to carve this out and their existing dining out business into a separate app called District, which they intend to launch probably in a fortnight's time, and build that as a category. It's an emerging category where Indians or the Gen Z are spending on events and everything else, where they're going to combine all of that. And obviously that business will benefit from cross leverage from Zomato's existing user base. So from a strategic point of view, I think it's a great acquisition for Zomato, because over a medium term, over the next 5 years, 10 years, the value of the business can be far, far higher, because there's a huge potential. There's a significant incremental spend happening in that category. It allows them to capture that. And from Paytm's point of view, it just reduces one more incremental thing that we're doing, because they, over a period of time, they've built so many of those businesses, and in many of those businesses probably are not related to their core business. So it just helps them to bring or double down with a sharper focus on their core business, the payments business, where as it is they are seeing very sharp competition. So I would think it's a win-win for both of them.
Good morning, Niraj here. Thanks so much. And good to have you in this list of argumentative Indians out here talking about Zomato-Paytm. Just one quick thing, Pankaj. So let's assume that the ability to decode whether it is overpaid or no right now, as you said, is a slightly short-term view, and we don't know how it will turn out. If this doesn't work, because Paytm has not been able to combat Book My Show in that fashion, and Zomato therefore entering this category as the second player, right, if you will, and Book My Show has this stranglehold here. If this doesn't work, how big of a damage could it do to Zomato because of the money that it is paid out? Let's say 3 years out, if this doesn't work.
Good question, Niraj. See, from a financial risk point of view, now the 2,000 crores cash they're paying out is equivalent of 1 year of Zomato's cash flow. Because it's a company which is generating cash. In a couple of years' time, Zomato will be generating 5,000 crores of cash. If I'm not mistaken, in FY27, Zomato is expected to generate 5,000 crores of cash annually. And from there, their cash flows will keep increasing. So Zomato has now become a cash machine. So they're already sitting on about 10,000 crores of cash on their balance sheet. And they're accruing cash every quarter or every day as we go along. So I don't think so that it's a failure of this business will have a significant impact on their balance sheet in that sense. For a company of that size, which is already $30 billion, they need to take meaningful bets to fuel their growth and sustain their growth for longer term. The growth initiatives or the growth bets for a high growth company like Zomato has to have adjacencies with their existing set of business. And I think this business has a very strong adjacency with their existing set of business. More importantly, it will bring some more incremental critical mass to the existing business which is there. And the very fact that they are moving it to a separate app clearly means that you're making this business very strategic, and you want to scale this big time. You want to double down on this with a separate dedicated team for the business, carving it out in a separate company and an app, and bring much more sharper focus on the business. On the opportunity set, I think the category is growing and it will emerge as a large category, and it has a room to accommodate a second player. I think, as you rightly said, there's only one player which dominates the space currently, Book My Show. I think the space will definitely have, the industry will have space for one more player. So I think my sense, and Zomato has proven their execution capability. So my personal sense is that they should be able to do a good job in execution and scale this business. In case it were to fail, I don't see it having significant impact on Zomato's balance sheet.
Sajid here. Just a comment from you. Do you think that Ant Financial, which exited partly or more than half of its stake in Zomato, was early to exit because it did not see the strategic intent of the management?
Well, I would not correlate both the issues. I think they're independent. I'm not sure whether Ant has a board seat, so they might not be aware of this impending transaction. But having said that, Ant Financial, for them, it was more a financial investment. They've been invested into the company for last, I think, 9 or 10 years. What I read was, I think they've already made their money 4 or 5x being invested into Zomato. So for financial investors will make their exit at some point of time or other. Having made good financial gains, I think they would have thought in their wisdom that it is fair for them to take the money off the table. Having said that, I don't think so. that's a reflection on Zomato's future growth prospects. I think the growth prospect of Zomato continues to remain strong, and which is what also a reflection that the block by Ant, there were more than enough takers for whatever supply was there from Ant in that sense.
One more, the going out business, we've seen Book My Show having the majority stake in that market, but it's still not able to scale up as envisaged. The top line for Book My Show was around 800 crores in FY28, and it's been there for nearly more than a decade now in this business. What Zomato is arguing is that in the next 2 to 3 years, it will have a 10,000 crores of gross order value, which is there. Do you see this entire segment growing at a very high pace?
See, the way I have seen these internet businesses or new age technology businesses work is you take your bets at an early stage of evolution of an industry or a segment. These are long-run businesses. In 2013 or 14, when Zomato started its food delivery business, I never thought that Zomato will become the top amongst the top 40 companies of India. The fact is today the business is large. It's within visibility that that business will start generating $1 billion of cash flows every year in the next 4 to 5 years. I would have given it a zero chance in 2013 when I first used Zomato app that a company like Zomato can generate $1 billion of cash flow in 5 years' time. India is young. India is changing very fast. Consumers are adopting very fast. The category is certainly out there. All of these emerging categories, they reach a point where you get to an inflection point, and from there you have a J-curve growth or a hockey stick growth, as we call in investing parlance. Some point of time, I think this space will emerge big time, and we'll have hockey stick growth. What is important when you're making strategic investments or business, this thing is to be there, build your platform, and be out there so that when that J-curve growth really plays out, you're out there to capture that growth and establish your dominance in the segment. In that sense, I think the move from Zomato makes imminent sense from a strategic perspective to my mind.
Got it. Pankaj, Harsh also joining in. Let me quickly ask you on Paytm, from that perspective, from that lens. You've got roughly 8,000 crore of net current asset currently lying in Paytm, 7 to 8,000. This is now taking literally cash, more cash into the company, arming the company with more cash to probably grow its core businesses. How do you view it from Paytm's perspective?
Harsh, any incremental cash is a good news, but I think the bigger implication for Paytm is they can do with less distraction and more focus. Given that in their core business, which is the payments business, which is the core of Paytm, and they've been trying to build businesses around that, they've seen severe competition where clearly PhonePe and Google Pay have taken market share and built dominant position from Paytm. So it's important for Paytm, and there are many more players trying to get into the payments ecosystem, because all of us know UPI is already $2 trillion of annual transaction value, and it's still growing at a very high rate and probably will keep growing given the strong growth drivers. It's important for Paytm to sharpen their focus on their core business and define what their core is. When it comes to the internet businesses, the customers are very demanding. They don't like to get distracted, and because the customers are so demanding, it's very important for businesses to succeed. For businesses to succeed, to be very sharply focused on what they stand for, what value proposition they're offering to customers, and bring a very sharp value proposition to the customers. So in that sense, I think in the new strategy which Paytm is trying to build its business, it's very clear that they want to focus on payments and they want to focus on financial services. They had at one point of time designs or thoughts of doing Paytm Mall and all of that, but I think now in the new scheme of things or in the rework strategy, all of that is clearly taking a backseat, and I think it's wisely so. So I think while any cash is good, and from Paytm's point of view, from where they bought this business, they've scaled it meaningfully in the last 6 years, 7 years, and made handsome profits out of it. But I think the bigger thing is it will reduce, it will help them focus more sharply on their core business, which is financial services, and double down their resources on that business rather than trying to do everything under the sun.
All right. Okay, thank you so much for that, Pankaj Murarka. That is going to be an exciting morning. Just before we go into that break, I just want to pull up a compilation of what most brokerage houses are saying, and most of them are fairly bullish. Yeah, I have 4 buys and an outperform with the highest target price there set by Jefferies at 335. So interesting morning going to be panning out for Zomato. We'll take a very short break, but on the other side, we get the F&O picture with Agam Vakil. Stay tuned.
Welcome. This is India Market Open. We're taking stock of the futures and options space. And yesterday was a day where we saw the Nifty inch up just a tad bit. There was a little bit of strength towards the latter half of the session. And the question really is that do we see a follow-up today? Let's start off by taking a look at the Nifty futures. And as far as the change in open interest is concerned, again, that is something that we're going to keep an eye on, going in. So let's have the August futures on your screen. And we do have very little change in OI. In fact, when it comes to the Bank Nifty as well, and even though we're sustaining about the mark of 50,500 at the moment with marginal weakness yesterday, a little bit of unwinding in the August futures, we move into a weekly options expiry today. And that said, while we do have the most amount of open interest accumulation in the 25,000 call, on the lower end, it's fairly distributed with respect to puts. So we have a good amount of accumulation, around 24,500, 600 and 700 puts. And those are the kind of levels that we're going to keep an eye on, perhaps where the Nifty could potentially take support in today's day of trade on an intraday basis. But moving on, let's also talk about stocks very quickly. We have Ipca Labs, HPCL and Divi's Laboratories looking at longs. A little bit of weakness seeping into Dr. Lal PathLabs, so shorts there. And among stocks which are seeing unwinding, we have about a short covering perhaps for something like an Abbott Crompton and JSPL. So keep an eye on these counters. But the question really is that with the way markets have been behaving, with a slight positive bias, but largely range bound, where do we go from here? Well, let's get in an expert opinion. We have Rahul Ghosh of Hedge.in, who's joining us on the show. Rahul, good morning. Thank you so much for taking the time out. Your view on the markets at the moment and how are you placing your options bets here?
Good morning and thank you for having me. So if you remember, in the last 2 weeks, I had mentioned that if you look at the statistical data of the last 5 to 8 years on 5-week expiries, you will notice that there are two-sided movements always. And keeping that in mind, even last week, we planned a very simple bull call spread of 24,700 and 25,000. That view has played out quite well because markets bounced back from the lows of 24,100 or 24,000. And today we stand close to 24,700 and 24,800. So everybody from last week who had taken that bull call spread would have profited quite well. That is the view that we continue to have. We see a bullish bias for the rest of this expiry. We expect markets has still about 200, 250 points on the upside. This is with respect to Nifty. The laggard, which has been Bank Nifty, also we see some slight upside, although we expect it to continue to be a laggard. But we see some sideways to upside move, which is the base of our strategy today, which is on Bank Nifty.
Well, speaking of the Bank Nifty, Rahul, what's the way forward here and what kind of an option structure are you deploying at the moment?
So the view currently for the next week or 10 days is mild upside to sideways. That is what we foresee for Bank Nifty. It has been a laggard for the last 3 sessions. And generally, if you look at, once again, statistical data, you will see that whenever there is a series of down days and underperformance in the Nifty, then you see a series of up days, namely 2 or 3 in nature. This is what we are expecting for the next week or tomorrow and the week to come. What we're doing is we are buying the 50,800 call option of 28th August and we are selling the 51,200 call of 28th August. Simple end of August expiry bull call spread. That is the first 2 legs of the trade. The second 2 legs of the trade, in case things don't pan out and Bank Nifty does not move up, are basically our protection legs. What we're doing is we are selling the 53,000 call of September end, giving us more credit as September end would have much larger credit. And to hedge that, we are buying 52,800 of 28th August again. Now, the sole purpose of the last 2 legs is in case Bank Nifty does not move up, to give us a little cushion and bring our loss down. The net risk in the trade should be anywhere between 1,500 to about 1,750 rupees. When will this trade lose this money? In case Bank Nifty does not move up or stay sideways. That is the case where you will have this rupees 1,500 to 1,750 rupees loss.
So just to reiterate, there are 2 aspects to this particular option structure. The first one is a simple bull call spread that Rahul is deploying, and this has an expiry of the 28th of August, where he is in fact looking at 50,800 call where he's buying and he's selling at 51,200 call. And as against that, this is just one part of the option structure. The other part is also going ahead and selling the 53,000 call of September. And as against that, he's also looking to buy the 52,800 call as well. And as he's mentioned, the risk for this particular strategy is at around 1,500 rupees. Rahul, on that note, thanking you for joining us and taking us through your views and, of course, helping us with that particular option structure. We will be keeping an eye on how well we can, in fact, go ahead and place this out. But with that, it's back to you, Samina.
Thank you, Agam, for that. That's the view coming in on the index and, of course, specific trades that Rahul was recommending. Implied Nifty is indicating to a flat to slightly higher start. 54-point gap up is what we are expecting. Remember, yesterday was a quiet day of trade. The last hour of trade saw buying coming in, and that led to the Nifty to close comfortably about 24,700. And it seems like 24,800 could potentially be taken out today. Shrikant, how are you feeling about the Nifty? It didn't give much of an opportunity, to be honest, when it's made that swift move over the last 2 days. From where we look at the Nifty at, is it a buy the dip or sell the rally on the index?
Yeah, good morning, everyone. I think, Nifty was like very clearly into uptrend after crossing the levels of 24,500. And most of the time, whenever there is a dependency on the global cues, we miss intraday moves or let's say very short-term moves. But broadly, I'm of the view that now again we are approaching to the levels of 25,000 where the market is having good amount of resistance. So close to 24,950 or 25,000 levels, it is better to stay away from taking any specific long position on index. But yes, in case if there is any correction and again market comes back to the levels of 24,700, then there we should look for taking some long bets. But at these levels, after opening higher, it is better to stay away. Yes, Bank Nifty did really well. And there we saw a smart recovery in yesterday's trading session. There we have a bullish view and I'm expecting Bank Nifty to move towards at least 51,200 or 51,800 in next 1 or 2 days of time. So Bank Nifty should be on the radar and we can create or hold long positions with a stop loss close to 50,300 on the downside.
So constructive on Bank Nifty, even though the index ended in negative territory yesterday, there were a handful of banks that have performed well on Monday and Tuesday. Nirav, I don't want to ask you about the markets because I feel like it's difficult to take a fundamental call on the index on daily basis. But the big story this morning is Zomato-Paytm. What do you make of this deal? Do you feel that Zomato has overpaid? What do Zomato investors do and what do Paytm investors do? And also, quick disclaimer, all the brokerages we've looked at so far have maintained their buy call and target price on Zomato, with some even increasing their target price.
Yeah, good morning and thank you for having me on your show. I think from the seller's perspective, that is Paytm's perspective, I think it's a win-win. And I think as far as Zomato is concerned, the general perception is that they're paid about 8 times the revenue. So I think on the face of it, prima facie, it looks like an expensive deal. But given Zomato's track record of scaling up companies, I think markets definitely are upbeat that they'll be able to repeat the trick going forward. So I think it's taking into account the prospects of a strong scale-up, I think it looks positive.
So it looks positive for Zomato from a fundamental point of view. Dare I ask, Shrikant, how are you looking at both parties of this deal, Zomato and 197 Communications on the charts?
I think in that, if we go through with the technical pattern of Zomato, then there we are seeing consolidation sort of activity. Broadly, I am of the view that it is into gradual uptrend and eventually it is heading for the levels of at least 300, 320 based on its technical formation. So I am of the view that if there is a medium to long-term view, then even at this level, it's a buy.
What about 197? Anything at all there?
Actually, I was not tracking it very closely.
Okay.
That's it.
Okay. Let's just get your picks for this morning, Shrikant.
Yes, I think, all these index heavyweight stocks, especially like ITC, Reliance, they should do well because now we are very close to those levels from where again we can see some stock specific sort of activity because now we are very close to 25,000 levels. So here we need to be more and more stock specific. We like ITC, which is around some 505, 506 levels. There we are expecting stock to move towards 525. We can keep stop loss somewhere close to 494. And the other stock on which we are bullish is Bharat Electronics. The stock has maintained its important level of 300 despite there was weakness in the market. Here, I think we can keep stop loss around 294 and we can expect 330, 335 on the high side. So Bharat Electronics, ITC should be on the watch list. We also like Reliance Industries, but it is now very close to its resistance level. But broadly, there also we are expecting stock to move towards 3,050 or 60 sort of levels.
Well, we'll talk about a few of those FMCG names. And Nirav, I'd like a view from you as well on Tata Consumer. But let me do the big stock movers on the radar today. beyond Zomato and Paytm. Varsha is joining in with the list. Varsha, what else do we have today that's in focus?
Good morning, Samina. So let's start with Welspun Enterprises, wherein they've received order. The company's subsidiary received order of around 160 crore from BMC. Now this is for rehabilitation of man-entry sewers by Sensex technology. This project needs to be executed within 24 months. Then we have IRDA, which they are planning to raise almost 4,500 crore through multiple instruments, for which the board meeting is held on August 29. Now do note that earlier they had planned to invest 290 crore for setting up 900 megawatt hydropower project in Nepal, which is in advanced stages and will be country's largest hydro plant after completion. Then we have RVNL, wherein they're going to mark its presence in all Southeast Asian nations. They've signed MOU with Mrs. Daya Maju Infrastructure. Now post this MOU, they'll participate in railway projects in those markets as well as other markets. Special focus will be given on establishing manufacturing base in Malaysia for railway coaches and other railway products. And lastly, we have PNG Health, wherein they've come up with Q4 numbers. Now do note that they follow June to June financial year, wherein if you see revenue is down almost 6%. Now this was led by decrease due to adjustments in go-to-market strategy, while EBITDA was up 6%, margins were at 17% versus 15% due to lower cost of material and lower employee cost. The net profit was down almost 44%. Now this was due to exceptional item of almost 20 crore. Now this quarter actually reflects the typical seasonality of shipments during this period.
So there are a whole bunch of other names you want to track. P&G reported numbers. Welspun won an order for 160 crores. Zentech has launched a QIP for fund expansion. Looks like it could be inorganic or brownfield expansion the company is eyeing. Nirav, we saw FMCG sporadically do quite well. I mean, the index has actually posted very healthy gains in the last 6 to 8 weeks. One stock that may not have participated is Tata Consumer on back of that 3,000 crore deal that they had going, which is finally closed out yesterday. Do you feel like with that overhang behind Tata Consumer, it does become a good stock even fundamentally to buy today, because they've not participated, and secondly, now there's not too much of a negative overhang?
Yeah, the fact of the matter is Tata Consumer Products has not participated in this rally, and I think as far as the performance of the stock goes, I think it will depend on the prices of tea, coffee, and typically I think the prices tend to start moving up during this part of the year. So I think the negative seems to be over, but again at the same time we think that there's a limited upside from the current levels.
Very quickly, Shrikant, I need to go into a break, but with the rights issue now behind Tata Consumer, do you feel like it could break out of this range and reclaim levels of 1,200 and hence becomes a strong buy call from your end?
No, see, again, I can't specifically comment on Tata Consumer because it is into restricted list.
Restricted list, and hence not a technical call on the stock. But it'd be interesting to see how the stock plays out. We'll take a break. We'll come back. We're gearing up for pre-open trade. Your stock of the morning is going to be Zomato and Paytm, but along with that, there'll be a whole bunch of other broader market names that we'll focus on. We'll come back, so stay tuned.
welcome back. Let's take a look at the implied open. You're set for not a firecracker start, but definitely a positive start on the markets today, about 57 points up, hopefully on the Nifty. What's going to be the big news story of the day? We've spoken in detail about Zomato and Paytm. That's one story definitely to look at. But beyond that, can we look at some sort of revival in reality stocks? Are we going to see defense coming back? Let's get Nirav Shah's view on few of these points. Nirav, in terms of strategy, would you look a little more detail at any of the reality names? The reality index was the top loser in yesterday's trade. Are you seeing anything interesting there to now be constructive about?
Yeah, as far as the reality space is concerned, I think valuations are looking quite rich at this point of time. So I think we would wait for some correction before making an entry into the reality stocks. I think it's a wait and watch at this point of time.
Right. Srikanth, a couple of other names I want to quickly talk to you about is it'd be unfair if we don't discuss Pharma this morning with the sort of rally some of those Pharma counters witnessed yesterday. Let's start with your top pick in the Pharma pack, and if you've got a view on DV's lap, because that made a record high yesterday.
Yeah, I think, even if we go through with FIS investments, then they are shifting from financials to Pharma index. Which is what we can see based on their FPI numbers. But for Divi's Laboratories, yes, after a very long time, the stock has managed to reverse sharply from the lower levels. In fact, it is into gradual uptrend, but it was underperforming as compared to the entire space. But now, while looking at its medium-term pattern, I think it is on the verge of crossing its previous high of 5,400. So it's a buy at current levels and more on dips. We can keep stop loss around 4,700 for creating any long positions. I think the stock is ready to surpass its previous high of 5,400. We also like Natco Pharma, which is currently around 1470-75. And there also, if we see the pattern, then there also the stock is forming consistently higher top, higher bottom formation. So based on its technical formation and the previous breakout, the stock is heading for the levels of 1700 or 1750 in next few weeks or months. So it will take some time. But at this level, it's a great risk-reward ratio for creating any long positions for the target of 1700. And finally, we are also bullish on Biocon based on its technical formation. Recently, the stock has made a double bottom close to 310 levels. And now it is very close to the breakout levels of 360. So above 360, the stock can move to the levels of maybe 390 or 400. Broadly, we are bullish on almost all the pharma companies, but most of these stocks are very close to or above their fair values based on fundamentals. But based on technicals, all these patterns actually helps momentum traders to create long positions.
Right. Also, a quick check. It'd be nice to see what Zomato and Paytm are doing this morning in pre-open trade. It's a flat start on the index, so don't expect fireworks. 3.5% higher, so the market is perceiving this as a fairly good deal for Zomato. We're at 270 now on the stock in pre-open trade. Let's take a look at how Paytm as well is doing, and as good. It's a win-win, like Pankaj Muraka called it, for both parties involved in this transaction. A 3% likely gap up on Paytm is what we are eyeing. Pharmaceuticals we've talked about. Very quick word, Nirav, you want to come in whether pharma still looks like a good buy? And if yes, in the pharma pack, where is your biases?
Yeah, definitely. If one were to look at the Q1 performance of the pharma companies, I think it's been a very positive commentary. The domestic markets have done quite well. There is some signs of improvement in the US markets as well. Especially the larger companies like Lupin, Dr. Reddy's Laboratories have given very strong results. So I think that has led to the strong momentum in the pharma space. And I think we now expect most of these mid-cap companies also to start performing well. And I think going forward for the next couple of quarters, the outlook looks quite strong as far as the pharma companies are concerned.
That's interesting. Those are a few trade calls coming in. A quick one on Zen Technology. Nirav, you've been tracking this one. Numbers were phenomenal. It's been quite the star in the defense pack. went through months of hitting upper circuit every day. Today, of course, we believe they're launching a QIP and the funds will be used for inorganic expansion. Does that garner well for Zentech?
Yeah, so the opportunity in defense is going to be huge, and this is relatively quite a smaller player. So I think definitely there is a possibility to scale up, and hence I think the QIP, which will consider inorganic growth opportunities. But having said that, I think there are better plays in the defense space, like a Bharat Forge or Solar Industries, which could be looked at in a more serious manner.
Right, that's Zentech. The others, keeping the focus with defense actually. Shrikant, Mazgaon Docks, Garden Reach and Cochin Shipyard. They've had it quite rough in the last few trading weeks. Yesterday, of course, there was a little bit of a recovery or stabilizing, if I may say, or finding a bottom for these shipbuilders. Do you feel like there could be a quick buck to be made on a recovery in the shipbuilder names?
If we go through with all these three names, then they have broken their immediate support levels. So, which is something negative as per technicals. But as long as they are trading above their long-term averages, I think all these corrections will be an opportunity for positional traders to create long position. But broadly, I am of the view that till these stocks are not forming any reversal formation on weekly basis, it is better to stay away from taking any short-term positions. Like it is very difficult to make quick bucks in this particular stocks. But in this space, specifically Bharat Electronics as well as Hindustan Aeronautics, both these stocks are relatively better. Their formations as well as their overall performance is much better, and even on monthly and weekly basis, these stocks have managed to sustain above their previous lows. So in case if there is any specific momentum, we see the market, this particular sector is continuing, then I think Bharat Electronics and Hindustan Aeronautics along with Zen Technology should be on the watch list.
Nirav, what about you? What are you doing with these shipbuilder names? Do you feel like there's still an opportunity exists? Because you had that report from ICICI Securities and the stocks got trashed. Management, of course, had said that from FY26, FY27, we know what's happening, but beyond that, calling out visibility stuff. Do you feel like it was just pure profit booking because these stocks have generated significant investor wealth? What do you do if you're already invested in these shipbuilder names? Do you hold on to them or do you take your profits off the table for now?
For those who have entered into these stocks at earlier levels, then I think it's definitely a hold. But I think a very divergent picture is emerging if one were to look at the margins of the company, especially in Mazgaon Docks. Last year, the FY23 margins were close to 17%, and that has gone up to 25% in the Q1 of FY25. So I think the EPS has almost doubled from 56 to 95 levels. So if one were to take into account that margin trajectory, then I think definitely 110 rupees EPS for Mazgaon Docks is there on the cards. So if one were to discount that in a very reasonable way, then the valuation comes to 2,750. So I think if we were to enter into the stock, then I think we will enter at these levels. And as far as the other two stocks are concerned, I think the margin trajectory is on the lower side. So I think it would be better to stay away from them at this point of time.
Okay, let's get the top brokerage call this morning. Harsh is joining us and we've spoken enough about Zomato, Harsh, but you have another interesting report to talk about.
Absolutely, Tamanna. Good morning. Shah Metallics initiating coverage by UBS, a 57% upside from yesterday's close price. So UBS seeing a large value possible from this company. Just in terms of what the key positives are, they believe that the company has gone from a core commodities kind of play into the value-added segment, thereby consolidating, making their margins better, and therefore offers better value going forward. And they believe that this is the right route for a company like Shyam Metallics because it offers better value proposition and lower risk in terms of commodity price fluctuations. So that is one. So one is moving up the value chain, aiding margins and the like. Second is with regard to the capex and the growth. 10,000 crore of capex, of which 6,000 crore almost deployed both in CWIP as well as fixed assets already. 4,000 crore more to be deployed and they believe that that is entirely going to be done through internal accruals and therefore or existing cash reserves, and therefore no new debt coming on the balance sheet. That's a key positive again for a company like commodity play, and therefore that's one more piece which one will have to look out for as to whether that commentary is maintained. Last off, with regard to the numbers themselves, EBITDA and PBT CAGR expected at 39 and 50% all the way through FY27 respectively. PBT CAGR 39%, PAT CAGR, EBITDA CAGR 39%, PBT CAGR 50%. That's very strong. They're valuing the company at 8 times EV to EBITDA. That's largely in line with peers. A smaller company valued in line with peers. They're justifying that by saying that the value unlocking and the quality of the company is strong, and therefore no reason why they shouldn't value it alongside other peers. Very, very strong upside. 1,200 rupees is the target price they've given.
Yeah, those are Sham Metallic is enjoying that brokerage upgrade. The stock in pre-open trade is already up 7%, so looks pretty excited and healthy in trade. But Tamanna, I think Interglobe Aviation, that's the other one. Couple of big brokerages on those two.
A couple of big notes on it. HSBC has won out, Jefferies has won out, and they've launched their business class product on a few flights. That was expected, but yeah, Indigo is having a pretty decent morning pre-market as well. Now, the HSBC view, for example, talks about how does this end the dominance of a Vistara? And they actually go on to say Indigo's business class launch ends Vistara Air India's monopoly, positioning its product close to premium economy at Vistara. And Nirav, I just wanted your view on that, because this is really by far the market leader, has a monopoly, not a monopoly, but 60-70% share of the market, and now has gone into the premium sort of category as well. Do you see this as an upside in terms of a strategic move for Interglobe, an exciting time to maybe come into the stock?
Yeah, definitely. I think it's a positive going in for premiumization, just like what we have in FMCG space. So I think this is the premiumization of the aviation industry. And I think going by the traffic numbers, etc., I think this is only slated to grow going forward, because we'll be coming into the festival season very soon. So I think definitely it augurs well for the future.
Interglobe Aviation also looking to start the day off with a 2.5% up move in trade. So all of this is setting itself up for a strong sort of morning, but it's going to be largely stock specific. The broad-based movement on the street, I mean, that looks beautiful. 24,800 seems to have been taken out, at least in pre-open trade. So the next stop, of course, on the index is 24,850 on closing basis that the street will be tracking very closely. Well, we also have a quick word, if I can, get on Ola Electric. Nirav, fundamentally, how does Ola Electric look?
Fundamentally, I think it's difficult to justify the valuations, but I think it's a disruption space. So I think definitely the valuations are going to be on the upside. So I think at this point of time, we can see some consolidation, but I think the stock is poised to move upwards.
I know too tough to give a technical view on Ola because it's such a new listing, but I don't know, do you track it? I'm sure you get enough and more of your clients asking you what to do with Ola Electric.
Yeah, I'm extremely sorry because this stock is also in our restricted list. That's why I can't comment on it.
In between the lines.
Okay, Shrikant, now that you've seen the pre-open rates settle and we're looking at a decent start, maybe close to 100 points up on the Nifty, at least as far as pre-open is concerned, what would be your top pick? Would you add anything to the list? And if you look at some of the Nifty gainers, do you think Grasim or Hindalco or some of those players are one to watch out for?
No, I think in that particular list, if we go through with stocks like Vedanta as well as Indigo, I think both are showing a lot of strength. Vedanta especially, it has been into consolidation mode for last almost 3 months, and now it is breaking out of that. So from here, the stock can move to the levels of 490 or maybe 500 in next few weeks or months. So it will take some time, but it is into consolidation phase, and on the dismissal of that, we are expecting stock to move towards higher levels. So it's a buy even at current levels around 460, 465. Indigo, which is like showing some sideways sort of activity. There also we are seeing strength, and I'm expecting stock to move towards the levels of 4750 or 4800 levels. And no doubt Grasim is like something which is bullish on long-term charts. On daily basis, the stock corrected to its important levels some few days back. Now it is very close to the resistance level around 2750. But in case if there is any correction in next 1 or 2 days of time, certainly it's a buy. I am expecting stock will cross its previous high.
Grasim is top buy. What about Shah Metallics, Shrikant? Could be the other stock of the morning very quickly.
The stock has spent a lot of time. Yeah, absolutely.
Yeah.
This stock is showing a lot of strength. In fact, the stock was into this particular consolidation of 750 and 500 for last 1.5 year. And now, since last few weeks, if you see the pattern, then it has managed to surpass the resistance level of 750. From here, the stock can move to the levels of 900 or 950 based on its technical formation.
That's the call coming in on some of those stocks that we've highlighted for you this morning. It looks like from the broader market, Shah Metallic could be the stock of the morning on back of a pretty aggressive brokerage upgrade in Zomato and Paytm, of course, are the big two newsmakers in early trade. Markets were expected to see a flat start in early minutes of trade, but guess what's happened? We've taken out 24,800 in pre-open trade, and it very clearly seems to be consolidating with a very, very clear positive bias. That's the Nifty for you, a very healthy start. In fact, we've outperformed most of our Asian peers in early minutes of trade. 60 point higher on the Nifty 50, 0.2% gain is what we have on both the Nifty and the Sensex. Bank Nifty has been underperforming in yesterday's day of trade, but this morning there's outperformance on Bank Nifty. So a little bit of catch-up that's taking place on the banking names is what we are picking up on. Well, across the broader market universe, the action will be far more exciting. You've got so many stocks that you could be tracking, so stock-specific trade really will be the biggest story. And as we expected, mid-cap and the small-cap indexing outperformance once again in trade. Yesterday, remember, you had those indexes gaining nearly 1% with big spurts of buying coming in towards the last hour of trade. So a very healthy close when the Nifty actually ends the day at the day's high, and we've picked up from that in this morning's trading session. A quick check on how the breadth is doing and what the Nifty 50 stocks are doing. Grasim is your top mover. Tech is back in action, so Infosys, BPCL are trading higher. On the sell side, you've got about 10 stocks that are trading lower. So off the Nifty 50, 40 counters moving higher, 10 counters on the sell side. Well, you've got auto that looks good. You've got IT that's holding well together. Cement is holding okay. Tata Consumer gaining for the second straight day after, of course, the overhang of the rights issues behind them. On the sell side, you've got profit taking as expected on pharma names after yesterday's very sharp rally. Remember, the pharma index made a record high and stocks like DVs did really well. This morning, what you're seeing is a little bit of profit being taken off the table. But Tamanna, the action is in the broader markets. This is slightly boring.
No, absolutely. Action is this morning completely in the broader markets, Samina, and you're seeing that. Let's pull up what the mid-cap and small-cap indices are doing. First up, 108 points up, nearly 0.5% up on the mid-cap, 150. Let's just look at the small-cap index as well. They're also about 0.5% up. Some key stocks, we have to talk about Paytm and Zomato. Let's see how they have fared in the opening. The morning has been all about Zomato and Paytm. Zomato has bought Paytm's going out business. It was an expected move. It was also expected it would be a better deal for Paytm than Zomato, the stock price reflecting it to some extent. Remember, Zomato has also already seen a run up after its announcement that it was buying this business. So maybe that's why it's priced in as well. For Paytm, that 2,000 crore cash infusion is definitely a breath of life that company needed. That stock 5% up. Kalyan Jewellers is the other one to look at. The promoter is actually buying a stake of about 2.36%. There was a block deal this morning as well. That stock about 5% up, 5.5% up. Interglobe is the other one we've been talking about. The business class project or the product has been launched. A couple of positive brokerage notes on it. Stock about 3% up. BEML, we talked about in our setup this morning. They partnered with the Indian Navy. They're going to develop some products in Malaysia as well. The stock is 2% up. And RVNL was the other one, if you can quickly pull up. That also has a good set of order books coming in. RVNL about 1.5% up. Shah Metallics. Is Shah Metallics the stock of the morning? UBS has initiated a buy with quite a strong upside. Yeah, 8.5% up on Shah Metallics this morning. So definitely outpaced Zomato as candidate for stock in the morning, stock of the day or stock of the morning. Shah Metallics, they're completely shining, Samina, in opening trade on the back of that UBS note.
Yes, you've got some excitement in the broader market. So Shah Metallics is topping the list. Kalyan Jewellers, 5.5% higher as the promoter looks to buy the additional 2.5% stake from the outgoing investor. So the stock looks good in early minutes of trade. Deepak Nitrate also is showing up as we see it as one of your top gainers. Now, of course, the stock is one you want to track and keep on your radar. I believe there was some news flow on it, so we'll come back to that once we have some more clarity. The stock is up 4%. You've got Devyani International, Interglobe Aviation that Tamanna mentioned, Mankind Pharma, Rajesh Exports among the other gainers. On the sell side, it's got Pharma that is taking a bit of a break after yesterday's strong rally. PNB Housing Finance is seeing some weakness after the big move yesterday. A quick check on how Zentech is doing should give us perspective into what the market is making of this fundraising plans, and it's a 5% circuit on a 4.5% circuit. So market's very happy, and that supply that will be coming in will be getting picked up pretty swiftly, and that's what we've seen in the last couple of weeks now, where good companies are being able to raise funds at a good price, and that's what's helping them grow. Well, a quick check, Zomato has eased off quite a bit actually. It's only trading with a gain of 0.7%. Markets digesting it or trying to pick a side and determine whether this is a good deal or a bad deal for Zomato. But for now, it looks like profits are being taken off the table in Zomato. On Paytm, if we can bring that one up, because this was, I think, a unanimous call that it's a win-win for the counter and, of course, brings in some stability to its balance sheet. The stock is up 2.5%. Very quickly, Shrikant, opening thoughts. The start has been much better than expected. Do you feel like this could be building on to today's gains, and by the time we get into the weekend, who knows, another leg closer to 25,000?
Yeah, I think, in fact, it is good that the markets opened at an average levels. I was actually expecting market to open somewhere close to 24,900 or 950, where the market is having a good amount of resistance. But now, after opening around these levels, I think it will give one more opportunity for intraday traders to create any long positions. I think close to this 24,800 or 750, again, we should look for taking some long positions, because broadly the trend is on the upward side, and Bank Nifty is something which is going to support the market in next 1 or 2 days of time. That's the overall view based on its technical formation. So at these levels and a few points more on the downside will be an opportunity for traders to create long positions.
Okay, so that's the view coming in on the Bank Nifty. But if you look at how markets are behaving this morning, more of the action on the broader end of the markets, and there's little doubt about that. Some of the spaces that are working, and I just want to look at the specialty chemicals, fertilizers, Deepak Nitrate, FACT. These are some of the counters that are buzzing. Anything over here that you would now create positions in, Shrikant? Let me come to you on the charts first.
Yeah, I think, from the chemical basket, we like PI Industries, which is around 4,400 levels, and the entire pattern is quite bullish. And if we compare that with other stocks from this space, then it is relatively doing much better. Recently, the stock has made a higher bottom somewhere close to 4250, 4260 levels, and from here the stock can move to the levels of at least 4,800 to 4,900. So again, it's a good risk-reward ratio for creating long positions at current levels. We also like SRF, but the stock which should be on the watch list is always PCBL, Phillips Carbon. There also the momentum is very strong. Currently it is around 443, 444, but whenever there is a correction in the market, we see buying interest for this particular stock. So in case if the stock corrects back to the levels of 430, 435, then there we should look for taking long bets. I think finally the stock is heading for the levels of maybe 500 sort of levels.
All right. Thank you so much, Shrikant and Nirav, for joining us this morning and setting up, the trade and the top picks really this morning. It's all about Shah Metallics, of course, Zomato-Paytm more than Zomato in the early part of the morning, at least after that deal. But let's get a broader view. Let's zoom out a bit and get a broader view. We're joined by Nitin Bhasin, Head Institutional Equities at Ambit. And he's joining to talk about their 11th annual Singapore conference called Ambit India Access. It focuses on the opportunities that we're seeing in India right now. So, Nitin, great to have you on. Very good morning to you and glad to speak to you here on NDTV Profit. Let's begin by talking a bit about the conference, and why don't you set the stage and the context for us on what would be the key driver of the conversations you'll be having?
For the last 11 years, we've been bringing these companies to Singapore. And many of times, people have been asking investable companies, good quality companies, and scalable companies. At a time in India when everybody is excited about investing in India, and we always have been saying that India has expensive companies in the mid cap and the small cap space, investors still are very keen to meet companies in this market cap cohort. So the discussion points would be around which are the good quality companies, which are scalable, run by management teams, and one can disregard the valuations in the near term if one was to take a longer term view. It's not only across one theme, but across themes. So that would be the backdrop of conversations with the investors in this conference.
Just to elaborate on that, because this very clearly seems more like company-specific and top-down approach, or bottom-up approach in that sense. What are the parameters that you or Ambit has identified to determine the future leaders of tomorrow, which could be across themes and sectors? So what are those factors that are prime for you when you look at a company and say, look, this could be the future leader?
Good question. I think this has been the thing we've been writing for the last few years as a team, that companies which India is full of companies listed, and the last 2 or 3 years we've seen closer to about 200, 300 companies getting listed in the mid cap and the small cap space. Yet scalability is not for everybody out there. So what are we looking for? We are looking for managements which are designing the business, which are designing the teams, designing the products and the processes to scale up, not only in the present product, service line, etc., but how they can create new markets, how they are actually building talent pool for that. So we look at how they're thinking about capital allocation, how they're thinking about team building, how are they building out their competitive advantages, which sometimes can be fleeting, but to see through that over the next 2 or 3 years. Give an example, like electronic manufacturing services companies. There's so many of them which are coming up in India, but we think there are only a few which are doing it in the right manner and scalable. Irrespective of valuations, I think there are only a few which will scale up. Similar lines on real estate companies, similar lines on healthcare companies. So we are looking at a few things which I mentioned earlier: team, competitive advantages, at the same point in time, going out and building optionalities to get into new markets.
Nitin, just to get a sense of the kind of companies, all right, we've talked about the fact that you're picking companies that you see as the future of the India story. So give us a few examples. Which are the kind of companies that you have found exciting that are going to be part of this conference, and what are the kind of conversations you see panning out?
Companies like Amber, a company which is one of the leaders in the electronic manufacturing services, how they are transitioning themselves just from simply being a room air conditioner assembly company in the past, now getting into the entire electronics value chain, or even for the mobility value chain through their own subsidiaries. So that's the sort of a company. Perhaps a second company in the real estate space, like a Birla Estates, which is part of the Sensory Textiles and Industries in Mumbai, how they are building the land bank, perhaps going out of Mumbai to the other regions, asking them how are they identifying which markets to enter into, how to place their product in terms of pricing in the markets where they are new entrants. Or even another example of a company would be something like Poonawalla FinCorp, where we have seen a very good quality promoter family has recently brought in a very good amount of talent pool from a leading bank in India, and they're building the business model for scalability of 5 to 10 times from here onwards. And to have questions with them around how do they want to think about new segments to enter into, How are they thinking about building the collections? How are they building the team? So questions around that. So these are the 3 or 4 companies which we have at the conference, amongst other companies like Shriram Finance, or an unlisted company like Kisht or Vastu. They are participating at the conference amongst 12.5 companies participating.
Oh. Okay, so an interesting mix there. Some, BFSI kind of presence, a little bit of innovative presence. I'm just wondering, Nitin, are you as bullish on this whole premiumization trend, where companies that are focusing on discretionary spending, but premium discretionary spending, are getting a lot of love from investors right now? Do you see this as a sustainable trend in the Indian markets and some of the companies that are on this track?
So we also have Senco Gold, part of the conference over there, which shows you clearly that how in the eastern part of the country or the other parts of the country, also people are transitioning themselves from buying local jewelry to branded jewelry. For the last 1 year or so, we've been highlighting this trend, that the premiumization trend, whether it is cars, whether it is asset management, whether it is wealth, whether it is travel, because another company that we have under coverage is over here is Lemon Tree. So we're quite positive on this entire premiumization trend in India, and it's actually sort of percolating down in multiple sectors, whether it is jewelry, whether it is watches, whether it is cars, whether it is travel, or even for that matter, healthcare slash, I would say, wealth management also.
The thing that stood out for me is that this is interest from investors worldwide. And some of the stocks that you mentioned have had a pretty strong run. I mean, a KEI Industries is up 90% in the last 1 year. A Lemon Tree has had a phenomenal growth run rate too. KEI Industries, of course, also recently had a very strong outlook coming in from UBS. Are your investors talking about how expensive India is? Because very often when we are sitting here, a lot of the FIs talk about how India looks expensive as compared to its peers. Companies have stretched valuations. Is that the general feeling you get as well when you talk to these global investors?
Perhaps, for the last 1 year, we've been also writing this for the investors, that small cap and the mid caps in India are perhaps one of the most expensive market cap cohorts. But it doesn't take away the point that there are still companies in this cohort which have exceptional competitive advantages in their industry. So investors are worried about India being an expensive. But as I said in the beginning, our collection of companies, good quality companies, where perhaps the growth road map may be closer to about 5 or 7 or 10 years very clearly, investors are ready to see through such sort of a near-term valuations. They may have perhaps toned down their return expectations from a 20% in excess to closer like 14-15% holding horizon for the next 5-6 years. But questions remain like this. But they also know some of the Indian companies are going to maintain this high teen growth for a long period of time. So accepting those sort of stories for a valuation, and we cannot take away the point that India is a country where companies are reinvesting for growth, and some of these companies are reinvesting materially ahead of many of their global peers or even Indian peers.
I'm not sure if you track it or you have a view or you want to talk about it, but since it's the topic of conversation this morning, Nitin, wanted to know if you have any take on the Zomato-Paytm deal, because in line with what we were talking about, discretionary spends or companies investing in clear growth strategies, does this deal tick all those boxes?
We haven't written on it, but my preliminary view on this would be it's a difficult business in which Zomato has allocated its capital. It's a business which has been built out by Paytm for the last nearly a decade or so, and we know that the revenue scale hasn't been that satisfactory. So perhaps it's not that easy business, and Zomato has been trying for the last 5 or 6 years for different business segments apart from its leading business of food delivery. So perhaps this is another bet by them. We'll see how it pans out. But till now, it has been a difficult ride for the incumbent who's selling goods.
We've seen that with the success that Book My Show hasn't been met with just yet. But, well, markets do have a mind of their own, and that's the reality of the story. But thank you, Nitin. Good luck. We'll catch you over the course of the next few days as you take the investors through, of course, the next big leaders coming from India Inc. Great getting some perspective from you as you kickstart that conference. We'll take a break. We'll come back. We'll talk to two very exciting managements on the other side. So keep it with us.
All right, let's talk about VA Tech Wabak. They have secured a repeat order of 415 crores. It's a company engaged in the business of water treatment, design, supply, installation, and management of drinking water, wastewater, industrial water treatment, and desalination. So interesting space. Skanda Prasad Sitaraman, the CFO of the company, is joining us now on the show to talk about this repeat order. It's an operate and maintenance order, I believe, Mr. Sitaraman. So let's begin with the details of this 415 crore order and why you feel that it is going to be an important pivot for the growth plans you have going ahead.
Good morning, Tamanna. Thank you for the opportunity today, and very good morning to your viewers. We have a very clear laid out strategy that we want to increase the share of our operation and maintenance business of our overall revenues. We are today at about 15-16%. We have set a medium-term target of getting it to 20%, and this order is pivotal that way in furthering this revenue stream growing. What is also more important is this is an order that we have been already executing for the past about 10, 11 years. We built the plant. The plant was commissioned in 2013, and this was the first DBO model desalination plant for domestic water supply in all of India. And we have been maintaining it for the past 11 odd years. Now we have secured an order for 7 more years. That makes it an overall about 18-year life cycle. And this is also a demonstration that long-term O&Ms can be successful, can be successfully maintained, and this is also a success story for desalination, both for Chennai and for Bhopal.
So, let me just come to the financials before we get to the bigger picture of desalination and where you think you're going forward. If I'm looking at your Q1 numbers, it was a pretty decent quarter, margins at 13%. Bump up over there from 11.9%. You're seeing those margins maintain, and even for a repeat order like this one, where you've been with that client for a while and then they have now renewed that order. What are the kind of margins you see, and what is your margin maintenance guidance for the year?
We have given a medium-term guidance. We don't do it year over year because it's a practically lumpy business. 70-80% of the business comes from EPC, but we have given a band of 13 to 15% within which we would like to maintain the EBITDAs going forward. From the last year, we have also seen revenue growth now starting with the robust order book that we have, and this is an O&M order. This is not an EPC order, and while you see the margins are blended at about 13%, the O&M margins are generally much better. We don't give a sectoral margin guidance or a project-wise margin guidance, but I can tell you this is a very profitable order, and it is much better than 13%.
Okay, just give us an idea of your new projects and what are going to be your revenue drivers. You have new projects in Chennai, in Bangladesh. Since you have work in Bangladesh right now, also give us a sense, Mr. Sitaraman, of has there been any impact due to the political turmoil that we've seen?
Let me take the Bangladesh question first. This is a World Bank and AIIB funded order. So payment securities are very clean over here. So multilateral funded orders is what we go for. So we don't see any typical risk over here. We are waiting and watching. It is too early. We have demobilized our resources while the local resources continue to chug along over there. It's the engineering and procurement phase is what the project is at, which we will continue to do from the head office. The local site works will obviously be on a wait and watch mode, but we see that being multilaterally backed, being essential services sector, this should move forward, and we'll see in the next couple of weeks. We hope that things will be much better. From a Chennai order perspective, it's going very well. The engineering is largely complete. We are in advanced stages on the engineering front. Procurement again is on full swing. We will start our supplies by end of Q4 next year. Will be a peak in terms of procurement and supplies, and also marine activities will be at full swing in the next year. Civil activities are going at very good pace. There is a lot of mobilization of resources because huge amount of concreting has to be done with the size of the project. It's a 400 MLD project. And all things are on track, on time, on quality, and on budget.
Just to get a sense of the kind of order book you're looking at. Of course, your breakup is 60% rest of the world and 40% India. Do you see that continuing? Do you see more municipal orders bumping up from various states? Just give us a sense of where you see the order book growing.
From a strategy perspective, we will not go for state orders. We have repeatedly stated that we will be on orders only where there is a multilateral funding, a federal government scheme funding, or a letter of credit, sovereign guarantee, or a G2G funding. So we want to be very secure on the payment front, and we have been very successful on this. More than 98% of our orders in EPC are on this front. From an order book perspective, today we see that the existing order book is good, and we are also seeing the order pipeline to be very strong, especially in the Middle East and Africa region. India, last 9-12 months has been a little slower because of the general election phase. Now that that is passed, H2 should see some better action from an India perspective. But the last 12 months, having known that this is going to be a general election phase, we moved our resources overseas. They put in bids of over $1 billion. And we are already seeing the outcomes coming through one by one. Early on in the year, we had one order from Ras Tanura. It's about a $33 million order. We are now seeing the Chennai order coming through. And we have also stated in our earnings call, which was earlier the last week, that we are preferentially placed. We are a preferred bidder in orders of over 6,000 crores, and largely these are international in nature. Desalination, wastewater treatment. So we see that the international breakup will continue to grow, and Middle East and Africa will be the growth engine, while India will remain the core market. At an overall level, we will stay within the emerging economies, India, Middle East, Africa, Southeast Asia, and CIS countries. We have completely defocused from our European business. You would have already seen that we have divested the third European subsidiary. So we are practically 0% exposure on the Western Europe, while we will continue to see that the Eastern Europe, CIS countries still need a lot of water infrastructure, and that is part of our strategy where we are putting in business development efforts. But at this point in time, India, Middle East and Africa plus Southeast Asia is our core market.
Thank you very much for joining us today on the show. It was indeed a pleasure to get a better understanding of what's happening at Vatek Wabak. Good luck with business going ahead. Another company that has, of course, turned the corner significantly in the last 5 years is Fortis Healthcare. And the man at the realm of it all is Dr. Raghuvanshi, MD and CEO, who now joins us to talk about what business looks like and what the outlook is. Dr. Raghuvanshi, congratulations. You've successfully turned the corner in literally just 5 years, where you've changed the face, the name of Fortis Healthcare from a loss-making entity struggling with identity crisis to now a profitable one that you're managing. Up until now, of course, everything was looking well until I realized that 2 weeks ago, in a very recent development, after trying very hard in the last few years, Ageless is back on the books of Fortis Healthcare. Your private equity investors are looking to check out. I know you are looking to list this part of your business, but haven't managed to do so. What does this do now? Have you gone back to the drawing room? Because up until now, the focus was to improve and increase the revenue contribution from hospitals. But now with Ageless back on the front for Fortis, what happens?
Thank you. Thank you for having me, and thank you for your kind words. The organization has some innate strength in it, and that is what has resulted in the recovery which we have seen in the last 5 years. Now, as far as when we come to Ageless, it's our contractual obligation to provide an exit to the 3 PEs, which is about 31% of Ageless. Fortis does own a significant amount of control over Ageless by owning 54%. So now we have to commit fulfill our commitment to buy back this. They have put the put option on us. We could not list it, and there were several reasons for it, mainly commercial. We felt that because of the brand change, we had to do a lot of marketing initiatives which were sort of lacking, and that resulted in suboptimal performance of the company for last one year or so. July last year was when we changed the branding. So we are in the process of completing this transaction. Of course, it is subject to the shareholder approval and other statutory approvals. Post that, we would want to consolidate this business. We believe that there is a lot of opportunity here, and there is a lot of work to be done in order to get the performance at the level of the industry peers. And we believe that the kind of presence, geographical presence Ageless has across the country, we can definitely create huge value for the shareholders over there. And that is what we are doing. At the same time, as you said, that the hospitals are our focus area, and we continue to expand on that front. Last year, for example, I will tell you that we spent about 890 crores on the hospital side in capex for upgradation and additional capex for adding beds, etc. And we will continue almost in the same quantum for next 3 years or so. So that funds are tied up with internal accruals. We will be able to achieve that growth in the beds. So we are not going to be affecting our hospital segment growth because of this acquisition of the remaining equity, which we are planning to do.
Dr. Raghuvanshi, thank you for simplifying that for me. But I mean, the pool of money is limited, and I believe you're going to have to shell out close to 1,500 crores to honor that put option from your private equity investors. First question: how do you plan to fund this stake buy or buyback that you're doing for Ageless? And second, like while I said the pool of money is limited, does that mean that with this additional fundraise, there may be a little bit of a delay on the expansion in hospitals? I'm not saying that it won't happen, but I would imagine that would get pushed back a little bit, right? And also, how do you plan to fund this 1,500 crores?
Yes, absolutely. As you would see our balance sheet, we have a very healthy balance sheet. Our EBITDA to debt ratio is only 0.39. Net debt of only about 308 crores. So we have a huge ability to leverage, and we would definitely be doing this through a debt instrument, the acquisition of this Ageless equity, and that will not impact the other expansion which we have planned. As you might be aware that we had planned about 2,000 beds of brownfield expansion. So that is on stream. Most of the constructions are going on. And in next 3 years, we would see continuously about this year, we would see about 700 additional beds. But in the following years, we will see about 400 and then followed by a slightly higher number the following year. So that all is on track, and that will be mainly taken care of through internal accruals. Because of this, we have confidence because this is brownfield acquisition, brownfield expansion. So this would be capacity will be absorbed rather quickly and will yield kind of immediate returns and not like a greenfield facility. So we are pretty confident that the cash flows are robust enough to support the expansion of the hospital as well. Of course, if there is a large acquisition opportunity available on the hospital side, we will not shy from that because at that point of time, we could think of some kind of a fundraise.
Right. So, in terms of now next steps, right, in this business, what can we expect from you? When can this deal be closed out with Ageless? A. B, I know that diagnostics is a tough business. We can't take that away. I know there is conversations that you would be looking at rebranding once this comes into your foray. It gives you a little more power to sort of move things around, re-strategize. Tell me what the plans are and how do you see it and how much do you see it contribute to your revenue? Not immediately, but over the next 2 to 3 years, because you've got to make good this like you have made good Fortis in the last 5 years.
Yes. So essentially, there are several operational things which we need to do compared to our peers. Our though spread is higher, but at the same time, our lab to the collection point ratio is slightly not very sort of the way we would like it to be. So a lot of rationalization on the operation side will be done. At the same time, we will have a lot of focus on specialized testing, especially genomics, etc. We have already got a division which is doing excellent work in that area, and we want to expand on the specialized testing. So we are not going to position ourselves as a run-of-the-mill kind of a diagnostic provider, but a specialized diagnostic provider which is addressing the needs of the clinical fraternity be more than the wellness. Of course, wellness will always remain a significant part of the business, but essentially the focus would all be on specialized testing. At the same time, as far as the percentage of revenue for the overall consolidated revenue is concerned, we expect it to go to about 25% of the total revenue over the next 1 or 2 years.
That makes sense, rather than run-of-the-mill blood tests, etc. Dr. Raghuvanshi, good morning. This is Tamanna here, and good to speak with you after quite some time. Let me come just to your hospital business for a minute, because bulk of the revenues are also there. I think margins were a little squeezed in Q1 because of new hospitals. Give us the outlook here. Your per bed revenues, as well as where you see this boost coming from.
Yes. So as far as hospitals are concerned, in the Q1, typically there is a seasonality and the revenues are usually low in the first quarter. So that's why if you compare the fourth quarter with the first quarter, there was only a growth of about 4% in terms of revenue. But if you compare to the last year, it was about 14% growth in revenue during this quarter, year on year. So we expect that trend to continue. Our occupancy in the first quarter was about 67%. We expect that to go up to 70% in the running quarter. And second quarter typically would be always better than the first quarter. That is our expectation. And since the occupancy numbers have gone up, we expect that this momentum will continue through the year as well.
In terms of some of the turmoil we've been seeing in Bangladesh, etc., have you seen any impact at all? I think a fair number of patients are also coming in from in and around India. What is the picture there?
Absolutely. The international business in India is largely from Bangladesh and, of course, the Africa and Middle East as well. So the Bangladesh business is certainly affected. But overall, in the larger scheme of things, only 8% of our revenue comes from international patients. And that is kind of a mix of all the CIS countries, Africa and other parts of the world. So it has not been affected in a major way, but we are definitely seeing some degree of stress on the Bangladesh side of business. But I don't expect that to last very long. It is already sort of recovering. The communication transport is already resumed, and we don't expect that this will be a long-term thing. However, when we talk about international business, though in absolute terms it has grown, but in relative terms, our India business has grown more. And the percentage of international business has not really changed. It has remained about 8-9% over the years. So we expect that this going forward also it is going to be like that.
All right. Thank you so much, Dr. Raghuvanshi, for speaking with us. That's CEO and MD of Fortis Health, talking about the outlook and the current quarter, quarter two, expected to be better than quarter one, which is traditionally a little weaker for the hospital business. With that, it's a wrap on India Market Open. Quick check on what's happening in the markets before we go in to that break. Completely tepid. Markets have come off the highs of the day, at least on the Nifty. Let's look at the pairing of 197 and Zomato. 197 going strong, Zomato not quite so much. Remember, it was known that they were buying this going out business of Paytm, probably priced in, not that the stock's crashing or anything, but has given up most of its gains of the morning. We'll take a very short break, but on the other side is Talking Point. We'll be hearing from Anirudh Sarkar, CIO and Portfolio Manager at Quest Investment Advisors. Stay tuned.